Good morning, Julie.
We'll be recording this for Waycam for those who were not able to attend today, so that they too will have the benefit of this important information that our Director of Assessing, Bruce Morgan, will be sharing with us today. Bruce will go over many of the exemptions, or all of the exemptions. Then we will introduce the tax work-off program at the end, and then we'll take questions thereafter. Bruce Morgan, thank you.
Thank you, Julie. All right. Good morning. Are we good, Ann? We're good. All right. Good morning, everybody. So yes, as Julie said, I'm the new Director of Assessing. If you've been around a while, you probably would know Ellen Brideau, who moved on to the City of Medford last year at this time, and I started here in mid-February. So this is my first go-round to do this presentation. I'm glad to be here. So I see everybody has a handout. And I'd like to just start going right through it, and I will click through it so you can look down or you can look up as you choose, and the people at home are going to have a hard time seeing your handouts, so they're gonna benefit by our presentation on the screen here. So here we are, December 5th. There's all of the folks in my department on the left, and all of the folks here in, not all of the folks, but those involved in these types of things within the Council on Aging on the right. Is everybody familiar? Do you come here for programs, or everybody's been in Wayland for a little while?
Lots of them.
Yeah, all yeses? Okay, good. So, here's a list of all the programs that we have, and then we're going to go through them individually shortly. So the statutory exemptions on the left, the 5 there, that means that the state legislature has voted these in over many years, and so these are state programs. And on the right, you see town-adopted programs. These are things that communities have the opportunity to adopt or not, and Wayland pretty much adopts anything and everything possible as a way to try and help the senior population. So and one important thing about this is that on the ones on the left, the statutory exemptions, there is a provision within the state statutes that allows the town to do a match. Wayland, again, has adopted that match. So in every case, the dollar amount that the state allows, Wayland has doubled it. So a $500 exemption becomes $1,000, and so on. And again, we'll get into some of the particulars in just a few minutes. But it's again, a good thing. So Wayland has got the match for all the statutory exemptions on the right, and has adopted all those on the left, and has adopted all those on the right. One thing is that of the 5 statutory on the left, you can only get one. So you may somehow qualify for multiple, but you got to pick one. I think everybody wants to pick the one with the highest dollar return. So that's a no-brainer, and we'll make sure that if you do qualify for more than one, that's what happens. And one other thing is that somebody who may not qualify for any on the left, you might qualify for one of the town programs. So make sure that you, and as you talk to other people, that you explore the entire spectrum of opportunity here. And if you got something coming to you by any of these programs, let's make sure you get it. And the last thing I want to say as an introduction here is that, and it's very important, if you have a trust that impacts your property ownership, it is very important that that be done in such a way that you maintain your benefits. We have, unfortunately, even this past year, since I started, I think during last winter and spring, I believe a couple of people lost exemptions because they had put a trust in place since last year, and you need to be a trustee, a co-trustee, and that's an either or, and a beneficiary, or you just lost your benefit. So it's really important. I know a lot of people, as they age, and people have attorneys or children who advise them to set up trusts for the succession of the property over time. You might lose out. And I know one of them, the lawyer was scrambling to get the trust changed, but that person missed out on $1,000 last year, which is substantial money to most people. So be careful if you have a trust. Always, any questions, our office is right down the hall. Sue and the rest of the crew are right here. Please, don't hesitate to ask. We don't want you missing out on a substantial amount of benefit that's available to you because of something like putting a property in trust and you're not showing as a trustee or a beneficiary, now you're out. So that's the last general one. That covers all of these, okay, the trust issue. So, so now we're gonna take them individually. Clause 41C, this is called, this is one of the state exemptions. It's called the elderly exemption. And so what we've tried to do here is give you a brief overview of each exemption. And so this one, you've got to meet age, income, whole estate, and residency requirements. This is one of the more involved ones. But the amount, as you see near the bottom, of $1,000 is substantial. You'll see that others are less money. So you've got to be 65. You've got to you see the income limits. I don't want to read the entire slides. You have them with you. The home audience can see them. You've got asset limits, and assets means basically anything you have other than your house. It's your savings account, your checking account, your CDs or money markets, it's any stocks that you may have, it's any other type of property you may have. So this bumps a lot of people out pretty quickly who have some substantial assets out there.
You have to be very poor.
Well, you have to be lacking assets. This is pretty modest. So it's a single person 40, a married 50. That's a pretty modest amount of savings and other types of assets that you're allowed to have. Yes.
Bruce, under the assets, you did mention IRAs.
Okay, and it's any type of asset.
Okay.
Any type of asset. We're going to hold questions till the end.
I'm sorry.
And I'm sorry I forgot to start with that, but just so that for the WACAM and all. But yeah, any type of asset that you have, anything that provides you with a source of money, either as you own it or if you were to sell it in the future, they're all assets. All right. So, and you're required to submit property tax returns, state and federal tax returns with this. Anything you submit to our office is confidential. And that's a really important thing for everybody to be clear with and we hope comfortable with, is that some folks do not do these programs because they do not want to bring in what they consider to be very personal information. It is required, and we are totally bound by law that the files stay under lock and key and are available to no one. So that's an important piece of this. Okay, and now we're going to go to the next one, which is called 17D. This is the state language. It's full of numbers and letters. I call it alphabet soup. It's amazing how many numbers and letters of different statutes and programs there are. So 17D, a surviving spouse exemption, providing assistance to a widow or widower. This time you do not have age or income limits. You still have an asset limit. And the assistance amount is modest. It's $350. But again, with a fairly painless process, it's real money. All right, we're going to move on to what's called the Veterans Exemption, Clause 22. Reduces your property taxes for veterans or widows of veterans with a service-related disability and or certain medals, like the Purple Heart, for example. Again, you see now eligible age, income limits, and asset limits are are not applicable. The assistance amount is $800 up to the entire tax amount for a paraplegic veteran. And anyone who is 100% disabled has to provide documentation from the VA annually that they are fully disabled. So there's communication, and we have a veterans agent who comes in here on Tuesday mornings in the town administrator's office right through the wall here. If anybody has any questions or needs any help in that way, that's another nice service. We share her with, I believe, 2 other communities, and she's here for the morning on Tuesdays. And then clause 37, this is, again, a very specific, so we're getting into real specifics. We started out with an elderly exemption. We went to a surviving spouse exemption, veterans, blind. So they're self-explanatory. The name is telling you who this is for, what it's about. Again, there are requirements of a certificate provided by the state annually, and a potential benefit here of $875. Because the state amount, I don't know where this came from, I hope it's an interesting story, is $437.50. So that's why that number says 875, because Wayland's doubling gets you to 875. So I get a kick out of that number. 500, yeah, 400, okay, but 437.50.
50 cents.
50 cents, yeah. And these are not changing numbers. We'll talk a little bit later. There's one substantial benefit that changes every year, but these numbers have been locked in for a while. So the last one of the statutory exemptions is called the senior deferral. So to defer means you stop paying your taxes, and they start accumulating. And in Wayland, taxes are substantial for most people. So this would make them go away. So we've got an eligible age, we've got an income limit, no asset limit on this one. And the taxpayer decides the amount to defer, but up to 100% of their taxes. The interest rate paid is 3.5%. That is Wayland. The state amount is 8%. Wayland voted to drop it to 3.5%. It must be filed annually with the Board of Assessors, and the moment the property sells or the recipient passes away, the interest rate is instantly 16%. So as soon as there is a change, those who are needing to work with this stuff would want to make an immediate change. That is state law, 16%. Wayland has no say on that. It's a straight 16% interest rate. It is very, very rarely utilized, but it is a tool that is out there. If there's a mortgage on the property, the bank would have to agree that they are no longer in first position, as they say. They would, the town would move to first position. The bank would have to agree. So it's a big decision. This is one that doesn't work for many, but it is within the suite of options of statutory exemptions. Okay. And now we're moving over to the town-adopted ones, and this is our big one. Do people know what the circuit breaker is, the state circuit breaker? How many heads are going to nod for me? 1, 2, 3, 4, 5, 6. No. All right. So we've got one here who doesn't know. So the circuit breaker program is a state income tax program. And why are we talking about a state income tax program? Because Wayland in 2000, so 18 years ago, adopted a program to offer rebates that are based on state income tax, a state income tax rebate program. So again, there are requirements of age and income. Interestingly, no asset limits, except your house value has a limit on it. And the town is matching whatever you would get from the state, and it changes every year. So the income limits change every year, and the value of your house changes every year. And the match amount, the dollar amount for the program changes every year. So it's now, for the current year, it's moving to $1,100. And so if you qualify, when you do your state income taxes, you would be filing Form CB, which is really conveniently, I like the title of that form. C for circuit, B for breaker. So the state circuit breaker form, and then the next page within your state income taxes is the circuit breaker worksheet. And so if you get that granted through your state taxes, you are almost there to now get that same amount from the town through this locally adopted match. Have any of you gotten it? So we got a couple. Okay, we're gonna hold questions till the end if we please, but if anybody has gotten any of these exemptions, I could have said this earlier, but any of these exemptions within the past couple of years, except for the circuit breaker, you've already received an application. Savitri in our office, who many of you may know, sent out applications to all people who have received any exemption over the past couple of years, back around the 1st of October, I believe it was. Yes, CPA, which we're going to get into here in a minute too. Yep. Except the circuit breaker, and the reason that she didn't was that the state is, they don't release the new numbers until sometime well into November, meaning the new income limit, the new assessed value limit, and the award amount. They release it late. So she has not sent out circuit breaker applications, but they are going out momentarily. So if you've received it in the last couple of years, you'll be getting an application within, I think, probably next week or so. If you've never received it, please come see us. You can talk to Sue, and let's see if that's a benefit that you can take advantage of. The one little thing that's different here is that renters can qualify for the state income tax break because it's an income tax break, but do not qualify for the Wayland match because you don't have property taxes to pay, so you don't have property tax to benefit. All right, and now we're going to go to that CPA that you were just mentioning, the CPA, Community Preservation Act, which the town adopted in 2001. So if you look at your tax bill, you will see that you have your regular real estate tax, and then there's a separate line for your CPA tax. And it is a program that the state started, and every community has the ability to adopt it locally, and you can adopt any percentage you want up to 3. And Wayland decided to go halfway. Wayland has a 1.5%. I used to live in a community that had 1.1%, and that is the give and take that happens on the floor of town meetings sometimes. And I was there, and it ended up at 1.1. I don't know anybody else who doesn't either have 1, 1.5, because it's kind of the midway, 2, or 3. But no, we had 1.1. So Wayland's at the 1.5. And to give you an example of it, if your property had a value last year, fiscal 18, of $500,000, your CPA surcharge would have been just over $100 for the year. So if you apply for this and receive it, it will eliminate that surcharge from your property. And you can kind of estimate the math either side of that if your property is less or more than 500. So it's not a lot of money, but again, it is money, and it is available, and you can get help filling out the application and getting through the process if you want. So it's another one to just add in. So that is the community preservation, and now we need Julie is going to present the tax work-off program, and and then I will chime in a little bit, but, oh, and we're gonna get Shauna.
Yep, and Julie's gonna come too.
All right. And here comes Julie. The Waycam people are waiting.
Fast.
Start over here. Thank you, Bruce. It's a busy morning at the COA.
Yes.
So once again, I'm Julie Secord. I am the director of the COA, and I'm joined by Shauna Levine, who is our project coordinator. It is Shauna and Becky Patterson. Shauna from the Council on Aging oversees the entire tax work-off program. We have 40 positions this year, and each person works 65 hours, and it's a phenomenal program. Initially set up, and I encourage Shauna to jump in wherever, it was initially set up years ago as a win-win program, that it would allow residents to have an opportunity to help town departments and earn some money toward taxes, as well as town departments that didn't have any budget to be able to get some great projects done. So it continues in that way, but a couple of years ago, the IRS felt a little bit differently about how it needed to be structured. And quite honestly, we had to change things a little bit, but nonetheless, we still serve a lot of departments, and I'll have Shauna address that. The way that it's structured is on the fiscal year. The fiscal year starts on July 1st. So our next program will start July 1st. On June 1st, applications to the program will be available. If you feel that you would like to explore that option and see what different types of positions there are, I encourage you to fill out an application in June and make sure it's in by the end of June, because the first day in July, we hold a lottery. And that doesn't determine who is in the program and who is out of the program. It simply means the order in which you are considered for placement. That's all it means. If you happen to be away in June and you didn't get an application, and you decide in July that you would like to be part of it, you may still apply. But at that time, we then take all the names in order and place them at the bottom of the list and then just cycle them through. 65 positions is an amazing, 40 positions offering the 65 hours to each person has worked out really, really well. The state dictates what we are allowed to pay for an hourly wage. The state tells us that you may not pay any less than the federal minimum wage. You may not pay any more than the state minimum wage. We opted for the highest that we could pay for the position, which is the state minimum wage. As you may know, January 1st, the minimum wage will go up again. It's going up to $12 per hour. Because the next program we offer will start July 1st, 2019. People who participate in that program will be compensated at $12 per hour for the 65 hours that they've worked.
And it will be
So I'm going to turn this over to Shauna, who can give a little more information about the positions.
Sure. Julie did a great job of explaining the whole program, but I just wanted to mention that what we usually do in June is, as Julie mentioned, the applications are due June 1st, and usually very early in June, we have a little coffee. So anybody who would like to hear more about the program, we welcome you to come to that, and we can go through the application. The application is a little bit lengthy, but it has all the information that you need. And in addition to the W-4 form, you also have to do an I-9 form, and you also have to do a Corey form. We check everybody who, it sounds like a lot, but it's really not, and it goes very smoothly. So it's really helpful to come to that coffee in June so you hear more information about the program. And as Julie mentioned, this year everyone is working 65 hours for a total award of $715. Next year, because the minimum wage is going up, you'll be able to earn $780 for 65 hours of work. So we have a lot of different positions available, and what we do is, as Julie mentioned, we have a lottery. So that tells us the order in which we place people. But we also have to look at what people's skills are. So on the application, we ask people to tell us what you think you'd like to do. What are your interests? What kind of things have you done in the past? What are your skills? And then we request all the departments to tell us what they're looking for, the kind of person they want. And then we do the match. So Becky and I sit down, we look at all the applications, we look at the department needs, and we try to match people. And I think we've had really good success. Not every match is perfect, but we also really keep in touch with everybody. So what's really important is that you communicate with us. So if you're assigned someplace and it's not quite working, you just let us know and we'll try to reassign people. So just to give you some examples of some of the things that different people have done in the program. One very popular program that we're always looking for people for is the Just Like Me program, which is in the schools. So I don't know if any of you are familiar with this program, if your kids ever did it when they were in elementary school, but it's for 3rd and 4th graders, and it teaches them about different disabilities and how to work with children or adults that have certain kinds of disabilities, whether it be hearing loss or vision impairment. And the volunteers are trained, and they go into the classrooms with the program heads of each unit, and they help in small groups working with the children. And this is a great program. We've had really good success. This year we have 6 volunteers working in the Just Like Me program. We also have people working in the assessor's office. We have people working in the Board of Health. In the Board of Health, people do all different kinds of jobs. We have people helping with the flu clinics. We have people helping to answer the phone, do filing. A lot of the departments are really in need of people to do clerical work, filing. So that's something that's very popular. We have people working in the town clerk's office. I think she has about 6 people this year. Some people help with dog licenses, help with the census, a lot of different positions there. We also have about 6 or 7 volunteers who work in the library every year, so that's another very popular program. Let me just see what I'm forgetting. Oh, also in the schools, in addition to the Just Like Me, we've had people help out in the office, helping teachers to photocopy. We've also had people working in the art departments, helping the art teacher with supplies, with kids that might need a little bit of extra help. And we have people working in the fire department. Pretty much almost every department here we have people working in. So there's a diverse opportunity. It's great. Some people go year after year, although I do have to mention one thing about this is even though people have done the program for many years, everybody has to submit a new application. So even if somebody has done program for many years, doesn't mean that they would have preference over somebody who's new. So we do the lottery, and everybody has to reapply. Because everyone's considered part-time, temporary part-time employees by the IRS, we do have to submit a new application each year, and we have to query everybody each year. So that's why we do have a lot of paperwork. So I'm going to just stop for a second because we've talked a lot and just see if anybody has any questions about the program. Has anyone here done the program in the past? Anita, you've done it, right?
Oh, yeah, years
Yeah.
ago, though.
Yeah. Yes.
What is Cory?
Cory is the background check, the Massachusetts
criminal offense
criminal background check. Because people are working a lot of times with children or in other departments, a lot of times you're dealing with confidential information. We do have to do a Cory check.
We have to mandate all our volunteers. That's why the application, don't be intimidated by a 12-page application. I'm not sure that's even on.
Yeah. Oh, it got turned off.
Don't be intimidated by a 12 to 14-page application. It's all fun over coffee, but the I-9, that's Homeland Security. There are certain things that we can't change, and we just deal with it. We explain how you get through it, and it's all good.
Yeah, and we can certainly work with anybody individually who's having a hard time filling out the application. We're happy to.